Anthony, it's a very special day here. I love when we have guests,
Yes.
and this is a guest that I think is very, very important. Well, two guests. First, we're joined by Keith Redmond. He's been with us before. He's an expat and accidental American advocate. The work he does behind the scenes to help people is staggering.
Yeah, and he starts a few fights with people. I like it.
I think they start fights with him.
Well, they started. I'm going to say they started it.
I guess I'm a provocateur.
There you go. I love it. Yeah.
In this world.
We're also joined by Mike Wilson. Mike is from Scandinavia and has been very personally affected by the long-reaching arm of U.S. taxation laws like FATCA and CBT. We've talked about them in the past, but to have someone who has really so personally been affected by these laws, I think is staggering. So I want to thank you, Mike, for also joining us today.
Thank you, Claudine. I'm happy to be here and
And
look forward to
share your story.
Sharing my experience.
Two-tier question for you, Mike, and I'll let you answer in whichever order you want. How did you end up living and working overseas? I think sometimes Americans have a very difficult time understanding how easy it is to end up living and working overseas. You know, sometimes people get sent there by their company. Sometimes they fall in love. So how did you end up living and working overseas? You know, did you own a business, that sort of thing? And then you also had said to us, you know, you prefer to remain anonymous. And I'd like to sort of get a feeling on why you prefer to be anonymous today.
Sure. Well, I'll explain both. I was born in the U.S. and lived there until my early 40s. And I was working for a large, very well-known American company on the West Coast, where I met and married a beautiful Scandinavian woman.
There you go. All right.
Yeah.
All right. I win the pool. Okay. All right.
Yeah, Scandinavia's best export.
Yes. Yeah.
They send their women abroad to captivate Americans. But yes, she was actually working at the same company. She had gone to college in the U.S. and stayed and employed there. We met, we married, we had kids who are, of course, also Americans. But when an opportunity came up within our company to take a job rotation in Scandinavia, we jumped on that, you know, thinking it would be a really great chance for our kids to spend some time in their mom's homeland and to bond with their Scandinavian relatives. So, but we ended up liking it so much over here that what was supposed to be a short-term commitment of 1 to 2 years turned into permanent residency. And so now it's been, almost 15 years.
Wow.
Yeah. The reason that I want to remain anonymous is that, well, quite frankly, I'm concerned, maybe incorrectly, but I'm concerned about IRS vindictiveness towards expats who speak out. Maybe Keith can address that, but I applaud people like Keith who do so regardless. I've always filed tax returns, but a few years ago, I discovered that I was reporting some things incorrectly. And I'll explain that later, I guess. But I've taken steps to be fully compliant now. But I don't think it's worth my time and the thousands of dollars in accounting fees to go back and file amended returns on those earlier years. On top of which, I think it would only be a red flag to the IRS. So I prefer to fly under the radar, as it were, which I think is probably pretty common among expats.
Yeah, I would say so. Yeah. I mean, I've talked to a lot of expats with companies abroad, and they're sort of wondering, and, you know, people with millions of dollars, and then they say, you know, they're telling me like, well, my friends even have more money and we're not so interested in jumping in because there seems to be, you know, a feeling that, well, there's more risk jumping in. And, you know, honestly, the way the IRS handles some of these disclosures, I'm not saying that these people are wrong, because even when you do a disclosure and you argue for a lower penalty, they're throwing you these penalties as if you weren't the one who was coming forward to come clean. They're acting as if they caught you.
Yeah,
it really is, and it baffles our minds. Like, you're missing one of the key elements that makes this case different than something else. You didn't catch this guy; he came forward to you. So I would say that. You know, for our business, I guess it's not the greatest thing. I guess if more people came clean, that would be better for us. But I completely understand. And if somebody doesn't want to do something, and I see it makes sense to me. And there is a tremendous expense involved, and probably not for all that much tax that the IRS is actually missing out on.
No. And I think we've said it before, and we'll say it again. If FATCA went away, we would find a new study of law to practice.
Yeah.
Now, Mike, can I ask you, when you right now and when you moved overseas, did you continue to work for the same company? Did you get a new job? Did you start a business?
Yeah, well, I stayed at the company for those couple of years, but it became clear that there was no advancement potential over here in Europe. And so I had to choose, really, if I wanted to kind of stay at a kind of a dead-end job. It was fun for the first couple of years because it was a new territory, but then it became kind of boring. And, either that or I had to find another job or whatever. And, another challenge for expats, especially, if you don't speak the language well, is to, get a job in a foreign country. And at that time, I didn't speak the language that well. So I did what I think a lot of expats do, which is start your own consulting company. So yes, that's how I ended up owning a business.
Gotcha.
And what is and so you have a consulting business, and so what's the entity that it is in Scandinavia?
Well, originally, it was the equivalent of a sole proprietorship.
Okay.
That's how I started out. So, I would say, FATCA or IRS rules or whatever didn't prevent me from starting a business because I didn't know all about these rules.
Yeah, okay.
After I found out,
Nobody does.
Years later, when I found out, it became a huge concern for me. So here's the thing. Let's say you start a business, and it's just you doing personal services, and it doesn't matter whether it's, house cleaning or management consulting. It's deemed a sole proprietorship by the IRS. And so then in addition to your regular tax forms, what I realized too late was that you also need to fill out a Schedule C and perhaps a lot of other forms describing your business income, your expenses, your depreciation, your business use of a home, all these things that you would normally do in the U.S. Mm-hmm. And then depending on the tax treaty provisions of whatever country you live in, you might also be obligated to pay the full 15% Social Security tax, even if you pay similar taxes in your home country. Yep. Now, fortunately, here in Scandinavia, we have one of these totalization agreements.
Yep. Okay.
So I don't need to pay Social Security tax. But, yeah, as far as I've found, it's mostly only European countries that have these agreements.
Right.
Anyway,
and I think it's important, excuse me for a second, I think it's important to note on the totalization agreements is that there are countries that don't have those agreements, for example, like Israel. And what that means is that you have to pay self-employment tax double to the country in which you reside and to the United States, where you get zero benefit from the United States.
Yeah.
Fortunately, Mike is not in that situation. Fortunately, but it's still an onerous situation. Yeah. Mm-hmm. Sorry to interrupt, but I just want to clarify.
Well, and it's also just trying to get the compliance right too. That's the other issue about it. Then you're looking at this thing called totalization agreements. Are you kidding me? That name, it's just for having basically a house cleaning service. Mm-hmm. Well, did you look at your totalization agreement to determine whether or not your self-employment taxes were you're going to have to double pay them? God. I mean, how insane.
You are so right. Listen. I'm not your average expat, I guess.
Are you a smart guy?
I don't.
You're a smart guy.
No, I wasn't going to say that. But what I mean is, because I've talked to a lot of expats, and most of them don't know anything about U.S. taxes because they've never even filed.
Right. Yeah.
But because I also have, or we have, assets in the U.S., which are basically just the shares in my former company that we still own, I figured, well, I've got something to lose here.
Yeah, you do.
Issue. Yeah, so I've been filing my taxes, but you know, I had to become something of an expert because I was trying to do it myself. And you know, I finally gave up last year and paid an expert, and it cost me almost $2,000.
Oh,
wow. But
that's
let
nothing.
me explain. I mean,
that's a bargain.
When you
yeah,
what?
That's a bargain. That's actually when we do your basic streamline for somebody who has something overseas with actual now, and you did have foreign assets overseas as well.
Yeah.
Yeah.
Mm-hmm. Well, I don't think
it's $2,000 a year is sort of what it ends up being if we end up doing 3 years and then additional things. So if it was just $2,000 for 1 year, I think this is sort of what most people don't understand who live in the U.S. That's what they are paying.
But I think if I can clear up for Mike, it wasn't $2,000 for a streamline; it was $2,000 just for a return.
Right.
Just for a regular return.
Yep.
That's right.
And I would say that's a good deal. That's a very good price. And that a lot of places will charge maybe $3,500 to do it correctly. So $2,000 is about fair. And I think, you know, if I hear something as you tell me, I'll tell you if there was something, you know, maybe more you should have done. But from what I hear right now, you have a consulting business, and it's not really in an entity of any type yet.
Well, yeah. So let me clarify that. I ran this consulting company, or my own company, for a few years, and then I ended up partnering with a friend of mine here, and we incorporated a business together.
Okay.
Yeah. So then I was the CEO.
Okay.
And a couple of years after that, FATCA came into effect. And as a result, I learned that not only did I need to report my signature authority over the company bank accounts, but that I should have been reporting my interest in a foreign corporation.
Yes.
So now,
is your friend a U.S. person?
No.
And what's the ownership shares?
It was 50-50.
Okay. So you're not exactly controlling, though.
I put my partner who's non-American in the position of having to report our bank accounts to the U.S., but also potentially exposing the company to punitive fines if I failed to do so.
Wow.
So did you? So the issue that most people don't understand, if you have a controlling interest in a foreign corporation, the IRS requires this crazy form. Claudine and I have talked about this a lot before. The Form 5471, which is a form that came about in 1962, or maybe 1960. It's hard to determine which one, but it was really a form designed for large multinational corporations. Well, as the IRS sort of spreads its rules, it basically now applies to you and your partner in your consulting business as if you are Coca-Cola with subsidiaries around the world. That's where it's at. But you're 50% owner. Mm-hmm. And did you file a Form 5471?
I did not.
Okay.
So as a result of this, what I did instead was I removed myself as a signatory to the bank accounts, meaning that even though I was the CEO, I couldn't view our accounts online. I couldn't authorize payments. I couldn't even speak to the bank about our account because I wasn't authorized. And then there was the issue of my ownership in the company. As you say, well, I learned that there's actually two levels. If you have 10% or less, you have to report on one set of forms. And if you have more than 10%, it's another set of forms. And as you said, my advisor told me, these are forms designed for corporations. They're very complex, and it's going to cost you a lot of money.
Yes.
So what I did was I gave it away. I transferred my ownership in the company to my wife, who is not American.
That's
I know, and there's technical in that. How much was the company worth at the time, and so forth? Because your foreign-born spouse, you can't give them more than so much money a year, and so forth. But I think we're compliant in that respect.
But this is what an American overseas is forced to do.
Right.
Yeah, and there's actually, and I could just.
This is what's very, very sad and shameful of what the U.S. government is doing.
And I think you got some things right, too. And here's the thing. I think you got some things right, but I don't think you're exactly on the some of the control foreign corporation rules. You might have a few of them wrong. So even as you've sort of become an expert, there's still mistakes you could be making. And that's sort of what is really alarming when we're seeing people who say, okay, look, I want to come clean and be in compliance with everything and do everything the right way. They go ahead and do it. And even their tax professional will think they're doing it the right way. Reading all the forms, they think they're getting it, but they're missing one critical piece because there's so many pieces that sort of, and everything sort of conflicts with the common sense. They all sort of have their own logic stream to it, but there's different sort of logic streams, and you're trying to overlap. And so it's so hard to keep track of which rules apply in which situations. So we see even when they're doing it correctly, well, now, how is the IRS ever going to find out about a foreign corporation that you have? They don't have access to the Scandinavian records of corporations to see who the owner is. A bank may share information with them. The only way the IRS would ever find out about this corporation is if you self-report it on a Form 5471. Now they're alerted to it, and this is what the IRS has said they're going to do. This is what they're said they're going to do. We're going to review Form 5471s to see if there's errors, to see if they're substantially incomplete. Because guess what? If they are, we can go and whack these people with a $10,000 penalty per occurrence. And so it's this thing where if you're going to do it, you got to be so sure it's going to be right and you're using the right form and there's not some hidden thing you think you're getting and you're missing. And this is where I agree so much with Keith. If you're going to enter into the U.S. taxation system, really think about it. Some people have to. If you have substantial assets in the U.S. that the IRS can kind of get and has leverage over you, if you're going to be coming back,
right, that's going to be difficult.
Right,
you may have to.
Yeah, and if you're going to come back to the U.S., if you need your U.S. passport, they kind of got you. So those are the situations where you have to. But if it's a situation where they can't really touch you, it's a really, and I do agree with Keith because it's insane. And now I'm just wondering, you don't, and that's why I was texting while I was multitasking a little bit, because remember how I was saying how there's so many rules that you can't keep track of what is what. You actually don't have a CFC. You don't have a controlled foreign corporation because you don't control it, or you didn't.
Right.
You had 50% interest. Someone else had 50%. That other 50% owner was not a U.S. person. Therefore, it's not a controlled corporation owned by U.S. persons. So does a 5471 have to be filed even in that case? I don't think so. Let me double check with my expert.
Double check. While I ask Mike, now this sort of led me to the next question. I'm skipping ahead here a little, but I've made notes. We've talked to people before, couples who own a business together. You've got a U.S. spouse and a non-U.S. spouse. So what happens a lot of the time we find is the non-U.S. spouse is now sort of unfairly exposed because of U.S. scrutiny. And, we've seen where this has actually put strain on a couple's relationship. Have you, has it been a smooth road for you? Not to get too personal, but, I mean, can you see where it could put strain on relationships?
Well, I could certainly see that. Fortunately, my wife is very understanding, and that hasn't been an issue for us. I mean, given that she used to be a green card holder and does have a tax ID number, I guess there's also, the IRS obviously has some records on her going, 15 years back. But I guess we're not super concerned about that.
Good.
At the moment. I think our biggest concern really is planning for our future. It's really hard. It's hard enough to plan for retirement in one country under one set of rules, but let alone trying to manage the differences between two different countries.
Yeah.
So that's number one, and then number two. Well, actually, that's number two, because number one is really our kids. The whole reason I'm speaking out on this is because I hope to see these problems fixed before they start to affect our children.
Yeah, and
I think there's another thing that needs to be addressed here, or at least stated, that for Mike, it puts him in a very vulnerable situation, turning everything over to his non-American spouse, and even his non-American partner, because take a look at it. Life happens, and heaven forbid if something happens to his spouse, he is in a very difficult situation because he has nothing in his name. Same thing for his non-American partner. Should something happen to him? And this is happening across the board where Americans overseas, whether it be individually or professionally, like Mike is speaking about, are put in a very vulnerable situation. That's not
totally
acceptable.
I mean, I agree with you 100%, Keith. I mean, I feel secure with my wife and my business partner, but I mean,
but life happens.
Life happens, exactly. Yeah.
So
not to sound macabre, but it's realistic.
Right.
Yeah.
So I have an answer on your form. You don't have to file one every year because it's not a CFC. You have no 5471 obligation. So now this is the other thing I heard you say. You said your wife had a green card.
Yeah.
Did she surrender it?
Yes.
Okay, so she's no longer a U.S. person. Okay.
Good.
So you don't have a 5471 obligation. So that whole entire thing you don't need to worry about. So you really didn't need to give it to your wife. And by the way, if you did, and
why
you were,
does he not, Anthony? Why does he not have a 54?
Because this is what's so confusing. This is there's so many different rules at play, and this is why I have to double check before I say something because you could say something completely wrong with huge consequences. So the reason why is because his 50% ownership in that foreign corporation is not a controlling interest. So yes, you're 50. So it requires that 50% plus something to make him controlling. So therefore, it's not a corporation controlled by U.S. persons. Now, if say his wife was a 1% or some other U.S. person was a 1% owner and he was a 50%, then it is. But with a non-U.S. person picking up that other 50%, you always have to have equal, both sides have to agree on everything. So it's not controlled by a U.S. person. It's a U.S. interest. The only thing is, and this is Attorney Hansen is the one I'm texting with. He was saying the first year you created the entity, there was likely a 5471 requirement there. And if you did, I don't know if you contributed any capital. Sometimes there's a 926 that you need to file for that when a U.S. person transfers money into a foreign corporation. So that's that other form that no one even
didn't do that.
Yeah. So that's the other form. So as you're trying your best to say, okay, I just want to know what are the rules. I'll decide on whether or not I want to follow them. But you might have been, you might have had the wrong apprehension of what was even required, which leads you to take an action that you would maybe not take if you actually knew the correct one. And sometimes people come clean when they don't understand the rule, or I don't like coming clean. That's the IRS's word.
Yeah.
They come into compliance.
It's not coming clean.
Yeah.
Yeah, I know. I get what you're saying.
Yeah. So sometimes people make a decision with not knowing all the wrong. They make decisions without knowing all the facts, regardless of either way they go.
But Anthony, remember, it's not the individual. Sometimes, like Mike, making the decision. They're also using someone in the U.S. tax compliance industry. And as much as I have enemies, if I may say that, in the U.S. tax compliance industry, I also have a certain amount of sympathy because they can't know everything everything possible when it comes to an American overseas. Hence, mistakes are made. Yep. Just like what you had to do was take a look with your colleague.
Right. Before we submit something, even though I deal with this every day, there's so much you can become overwhelmed and blurt out the wrong answer. And I've done that before.
Anthony?
Yep.
Would I not then there's another form for interest in a foreign corporation that's not controlling, right? If I'm not mistaken.
Is on your 8938?
I can't recall. I thought it began with, I thought it was like in the 3,000 range, this form number, but the number escapes me. The
only way is shares. You may have to report those shares, just basically share value on your form 8938. That's actually the FATCA form that came out in 2011 on the 2010 Act. So you would just put down the value of the shares, and I don't know what shares in a privately held corporation in a privately held corporation are. It's sort of hard, unless we have something big. Not that it matters, because whatever that value is, there's no tax on the value. You're taxed on its earnings. So that's really all you would need to do, with the exception if you want to be in compliance. And I don't know, what year did you start this entity?
2009.
Okay, so in 2009, you would, on your Form 8938, reference the Form 5471 that was prior filed. However, in 2009, there was no Form 8938. So it's a little crazy here.
So stupid.
It's so stupid. For what? For what?
Yeah, I think you, Anthony and Mike, are proving a point that I have evolved into believing over these past few years of being involved in the situation, this Kafka-esque situation Americans overseas are in. And I would like your candid opinion on this. I truly believe that the U.S. government, and I will say U.S. government, does not want Americans living or working or having a business outside the United States. And the reason why I say that is that if they did, they would not make this situation so difficult and so punitive that it deters people like Mike of doing what he has been doing. Would you agree? Or what is your opinion on that? I don't think they want Americans living outside the borders of the U.S. or doing any type of business or opening a business. It's just not within the culture.
I think I'm going to disagree a little bit on this, because I don't think they care. I don't think they care about individuals at all. They're just, we'll process you whatever way we process you. Do what you want. We're just going to follow these rules. These rules,
the IRS,
right?
They're just
okay. So the IRS is the enforcer. Well, I would say these rules are all designed to keep capital in the U.S. And so when they're designed,
even if it's not U.S. capital.
Yes, of course. It's all about one way. And this is where you know that when you know about the tax code, you realize it's the number one biggest protectionist measure. And other countries trying to understand this too. Well, they get bogged down. They can't understand it. So everyone sort of loses track of the fact, like, wait a second, this is completely one-sided.
So would you call that a confiscation of capital, a confiscation of assets?
Well, I call the entire thing a confiscation. I would say that it is. Sure. I mean, in a way, you're treating you're treating certain assets one way if they're in the U.S. and same asset overseas, like in a case of mutual funds. You can have a mutual fund that's based in the U.S., the same fund, but it's registered in the U.K., sort of making the same investments. Oh my God, the tax treatment on the U.S. one is, hey, here's your earnings, no big deal. But on the foreign one, oh my God. All right, so let's start. Let's just start with your tax compliance fees for these. You're like, okay, we'll just give you $2,000 for tax compliance. So I hope your mutual fund earned a lot of money to offset that. And it was really, there's an example in 1986. Wall Street went to Congress and stuck this law in there where nobody was looking, in order for their benefit. And that's really how it works, is you always want to stick your thing in there. And because we're already in the most complicated thing in the history of the world, if you're looking to sneak something through, that's where you put it.
And may I chime in?
I have to.
The stupidity
I agree with Anthony.
Yeah, the stupidity of all this, I think, is that it's not even, they're not making money on taxes. This is all about reporting requirements. They just want to know where your money is.
Now, Mike, if I could ask you this, you filed a return last year. Now, filing a 5471 or not isn't really relevant if you did or didn't, because you didn't have an obligation. If you were going to report all of that income, pay all your Scandinavian taxes, get the credit you're entitled to, can you tell me what the big number is the IRS would be entitled to after you spend $2,000 to do your U.S. tax compliance?
Well, the irony, Anthony, is that I gave the tax accountant more money than I gave the IRS.
There you go. Where's the opposite of my shocked face? Yeah, I was kind of having, I had no idea what you made, but for some reason, I was thinking, it's basically just there's no legitimate purpose for this level of taxation. There's no revenue to really gain versus cost. Imagine that. You're putting
Let me explain. My only U.S. source income is dividends from the shares that we hold. I haven't sold any shares ever. So we're just holding on and having these dividends, and that's what I have to pay some tax on.
Oh my! Oh, so it's even worse. So if you didn't have the assets in the U.S., you'd actually owe nothing.
Well, I, as a U.S. citizen, would owe it no matter where they are. But my whole plan is to transfer those to my wife as well.
Okay.
Yeah.
Oh boy.
Now, Mike, how hard was it for you? Because, hard enough that you have to find an accountant that's familiar with expats, but so they have to be familiar with the country you're living in and the U.S. tax code. I can't imagine it's easy to track down an accountant that easily.
Oh, it's impossible. I mean, there is nobody. Well, maybe there is, but I could not find anyone. What I found was just a company that handles expat taxes, and they are generally familiar with treaties. And this was unfortunately before I met you guys, or I would have hired you.
Well, I might want to take. If you want us to, I'd be happy to take a look at what you've done. Just because if there is an easier way to be in compliance, because you might be taking a little bit of a risk now, especially with the assets there. If you're worried, you just sort of get a better picture of what's involved, and I would imagine it's causing having it in your wife's name. And it also, they could be looking at a beneficial interest. And so it could be something, if the IRS wanted to come along and to say, well, you didn't put it on your 8938 because we're going to count it as your wife and you had it and you transferred her for no consideration. We're going to call that a sham transaction, which they do all the time. I don't know if they would do it in this case. And I mean, this is sort of, I heard a great quote from a recent client of ours from Canada. And I gave him the quote for what it was to do. He was missing some Form 5471s. Sort of the same situation, consulting business, and the fee was a bit because he actually did need to file these, and there were several of them. And I was like, yeah, this is the fee. He's like, okay, let me give a call back and talk to the wife. Comes back, talks to the wife. I'm like, okay, yeah, it sounds good. I just want to get this done. I want to get it done right. And I was like, hey, that's great. So what'd your wife say? She says, no, there's no way it could be that much. That's totally unfair. And then he said to her, and I wrote this up on my board, it's not a matter of fairness. It's whether the IRS can do it.
Yeah.
And that explains most of it. Mm-hmm. They're all trained. None of them look at you as an individual. None of them look, no matter where you are just a number that they are trained. I think it's the same sort of psychology of boot camp where they strip down your humanity so they can build you back up to do whatever is needed to be done. And that's what the IRS does to normal people is they drop, they just sort of strip that humanity out, and your humanity becomes the IRS training and processes. What's good, what's moral is compliance. Immoral is non-compliance. Mm-hmm. That's it.
But I think what I'm also learning, and I have learned and have addressed, is that many situations the IRS's bark is bigger than its bite.
Yeah.
They think they have a way of going after Americans overseas outside the borders of the United States. Mm-hmm. And actually, they do not. They do not.
Well, I did see some people disagreeing with you. There are some collections agreements with some, but I would agree.
There are, but I have spoken to those tax authorities, and I have spoken to tax attorneys who have worked 20, 30 years in those countries, and they will not be honored. And I think the situation that people need to realize right now is the U.S. is not held in high regard when it comes to the taxation
Imagine
issue,
that.
most specifically with the IGAs being forced down countries' throats.
Mm-hmm. Yeah.
And these mutual assistance agreements will not be honored, and most especially will not be honored if that American overseas happens to be a citizen of the country in question. It won't be done. And I spoke with a gentleman who worked in the criminal investigation division of the IRS, and they're going to go after criminals. They're not going to go after the average Joe American overseas who is bringing in 60,000 euros or who has a small business.
Right.
But what the IRS will do is scaremonger
Right.
every single chance they get.
Absolutely. And if I could, I agree with your quote. I just want to put an addendum on there. Okay.
Okay.
All right. So see if you agree with me on this. The IRS's bark is worse than their bite. Therefore, when they can bite, they bite as hard as they can.
Yes,
Okay.
I agree.
All right. That's going up on the board. I'm putting that there. That's going up there too. Yeah.
Well, we covered.
I would say that as a result of the scaremongering, I've applied for citizenship over here.
Oh, okay.
Oh, wow.
I don't want to renounce my U.S., but I'm prepared to do it if Congress doesn't act pretty soon to provide some fairness.
And the IRS has a cute little thing about that too. In order to renounce your citizenship for tax purposes as well, you have to
be compliant.
You have to certify you've been in compliance the last 5 years. Otherwise, it's not valid as the IRS claims. So they really and then as Keith said, what's the fee up to now, Keith?
$2,350. But if I may add to what you said, it depends on the situation. Because if you get an accidental American, they can go ahead and renounce, and they don't have to have anything to do with the IRS. Because the IRS does not have a mechanism to come after them.
Pretty much, right. There's no way.
An American overseas who has nothing in the U.S., has no connection, same situation. They don't have to be compliant with the IRS. How is the IRS going to come after them?
Yes,
you see what I mean?
It hurts
so
when
there's a lot of scare tactics which are out there as well.
Yeah, when you see those accidental Americans who have, they were only in the U.S. for a week, and they don't even speak the language, and they're paying tens of thousands of dollars to come in compliance. I feel for them.
Hey, Mike.
That's a whole different.
That's a whole other podcast.
Mike, but I think what Mike was saying is that the time is now that any type of tax reform is going to happen. And I know that there is a big push, and I know Republicans overseas are doing this regarding territorial taxation for individuals.
Yeah.
I certainly hope that something like that comes through.
Yeah.
And, we have the FATCA repeal. We have two bills that are going to be introduced with Rand Paul and Mark Meadows in the Senate and the House, respectively, where there's going to be a hearing, which I'm intimately involved in organizing. And I don't know if you realize, which is refreshing to know that last week we had an independent financial organization give money to a lobbyist in Washington. This is the DeVere Group, Nigel Green, in order to help lobby against FATCA and to get FATCA repealed. And this is the first of any type of finance organization or anything who has actually stuck their neck out to help the people who are affected. I'd love to see more of these organizations, and I'd love to see people, do what you're doing, Anthony, and also more so as far as in the U.S. tax compliance industry to come out to say this is not fair. This is not right.
Yeah,
we need the rights of Americans overseas to be adhered to.
We're sort of the black sheep of the tax compliance industry. We're the ones saying these laws are stupid. But you have to stand up for what's right and not.
Yeah, Mike, what hours or percentage of your time do you think you've been looking into all of this and add up in there sleepless nights or lost sleep or just sort of, general agitation? What has this cost you?
Well, Anthony, the whole reason that I spent that money last year on those guys for helping with my taxes was because in the previous years I tried to do it myself, or I did do it myself, and I learned that TurboTax is not really geared for those needs. Yeah, so I would literally, I'm not kidding you or exaggerating, I would spend at an absolute minimum 3 weekends, so 6 days minimum, full days in my office trying to get my head around my U.S. taxes. And so I last year I said, you know what, I don't care. 6 days of my time is too much, money. Absolutely, I would rather spend I'd rather spend. I didn't think it would be 2,000. I thought it'd be more like 1,000. I said it's worth it to have someone else do it and then learn from them, so that hopefully this year I could do it myself again without so much concern. But in the reality, I ended up in my conversations with the tax preparer spending not quite as much time, but quite a lot of time back and forth with emails and so forth. So it still took quite a bit of time.
Well, I'm just so glad we were able to share your story, Mike. Like I said, I think putting a human face to some of these issues is probably the most important thing we can do. Now, Keith, you had quickly mentioned it, but I want to get back to that. You had said putting a human face to it, you're going to be testifying in front of Congress, correct? With people like Mike to share their story.
Yeah, people similar to Mike. I mean, this is, right now it's tentatively scheduled for the end of April, beginning of May, and this will be in front of either the full committee or subcommittee of the House Ways and Means. And it'll be expert testimony, which will include me, as well as others who have, for example, a tax attorney who works with Americans overseas, et cetera. But we're also going to have victim impact witnesses, if you will. So people like Mike, people who had to renounce because it was the only way they could keep their mortgage on their home where they lived. Otherwise, they would have lost their home. So just average people, which is important because there's this misconception in the U.S. that if you're an American living outside the U.S., you have to be a rich fat cat tax cheat. And that is wrong. Wrong. And that's why I don't like using the term expat, because homeland Americans think it means expatriate, where it's actually expatriate. And I tend to use the term Americans overseas, so that way we don't promulgate the misconception. So, yeah, we're going to be putting a human face on the average American overseas whose lives are being ruined by these U.S. government policies, in particular FATCA for this hearing.
Excellent. Well, Keith,
yeah,
like I said,
I think we're going to see a lot more outrage around FATCA if it doesn't get repealed soon, because according to what I've been reading, it's actually this year when banks in my country, at least, are obligated to begin going through their records and asking every single existing customer if they are a U.S. person. And that's quite a chore. And can you imagine if I don't know, China or Russia demanded that all U.S. banks report on the Chinese or Russian citizens? I mean, there would be outrage.
Right, and it's not just,
that's technically what the IGA is supposed to be about. The U.S. is supposed to reciprocate in kind,
but they don't.
But they will not do it.
Yeah, I try to. Thanks for sharing that with me, because we know there's some countries that started it in 2014. Those FATCA certification letters with a W8 WBEN in it, and I was just sort of curious where it is, and so your country is now doing it this year. So we'll probably see and then what happens is people call in a panic to say, "Oh my God, I didn't even realize I had to do any of this." And some people with some far more exposure than you have are running in a panic. And the other thing too, you don't necessarily need to be a U.S. person to get one of those letters, because it's just if they suspect you of being a U.S. person. For instance, if you were born in the U.S. but you were the son of a diplomat, you're not a U.S. person, but their FATCA triggers are going to say, "Oh, this person's born in the U.S., probably a citizen." So they're going to say, "Hey, prove to us that you're in compliance with the U.S. tax code." I don't have to be, right? So now you have to jump through all these hoops to say, I don't need to be. Yeah. I'm not a U.S. person. Why were you snooping through my stuff, by the way?
Wow, what a mess.
Well, also keep in mind that another population that's adversely affected by this are other countries' expats in the United States.
Yep.
Or I should say other countries' citizens who happen to live in the United States, because they have a U.S. address on file, and they get the FATCA letter as well.
That's right.
And oftentimes they have their accounts closed back in their home countries and their mortgages rescinded because they are living in the United States.
God, we're such jerks.
That is a population that is adversely affected. I know a lot of French people and people from Germany, et cetera, who are having their accounts closed, and they may be in the U.S. maybe for, temporarily for a work assignment because they're seconded there, or they may be living there, but they have interest back in their home country, which is normal, but they can't bank there because they have a U.S. address.
Keith, one of the things I think is really powerful for these people is to find groups, if you can find another American expat living in the same country, if you can find people that have similar issues. So I think what I really love is some of your Facebook groups that you're really a part of, people to join and just sort of get some advice. Do you mind sharing a couple of those groups?
Yeah, well, I think the key group for Americans, and yes, the name of the group is American Expatriates. So I'm contradicting what I said before, only because the original group was called that. I'm taking a look at possibly changing the name. But if you type in American Expatriates into the find bar up at the top on Facebook, it's a group I founded that's about 5,000 members now, and it's growing exponentially every week. Another key group is called Accidental Americans, and you can find that on Facebook as well. And that's started by a gentleman by the name of Fabien Laegre in France, because he is a French citizen who's an accidental American. So that's a good group to go to should you be an accidental American. Those are the two key groups. There's another group called Citizenship Taxation that specifically deals with citizenship taxation issues. So those, I would say those three groups are the key groups.
Okay, excellent.
For people to search and to join, especially if they're trying to find people, Americans overseas in their country, and also to realize they're not alone.
Exactly.
Or they need to learn more information.
Yep.
Or how to fight this.
Exactly.
Yeah.
Which leads me to, I want to say, Keith, again, we've said it before, we'll say it again. We want to thank you for all the hard work you put in. I know it's a lot of your own personal time and you're fighting the good fight. What we'll do is make sure to stay in touch with you. And as soon as you get more information about when you'll be testifying, you make sure to let us know because we want to share that with as many people as possible.
No, absolutely.
Yeah, and Mike, I think I'm going to be sending you out an email. I'd love to give you a little courtesy review of everything if you want, just to see.
Sure, thanks, Anthony.
Yeah, all right. And I think,
that.
we have your email, so I'll just send that out. So just let you know how everything looks for you.
Yeah, Mike, again, thanks for your time and for putting a face to this really sort of terrible issue. We appreciate you, spending the time with us so we can share your story with others and hopefully help some people.
Thanks for listening. And I hope that Keith and you guys and all of us together, we can present a voice that our representatives will listen to.
Yep.
Because I think you doing this podcast.
Yeah. I mean, expats are such an easy target.
Oh yeah.
I think so. I hope that we can.
Well, because
we can
we're
show
all
them some teeth.
tax cheats. So I wish somebody could find the millions that I'm stashing because I can't find them.
All right, guys. Well, thanks again, and I want to thank everyone for watching. If you have questions or comments, comment below, and we'll make sure to get back to you. Thanks again for watching.